Gold has been on a phenomenal bull run in past couple of months, and now everybody, including me, is asking the question: Should I buy gold right now? Well, the problem with such question is though that these questions come to our minds when the rally has already happened, and so maybe the right question to ask would be: Should I buy gold at these prices? And that is what we would try to answer in this video. So, to answer that, let's understand what factors actually drive gold prices. Now, historically, there has been two big reasons investor buy gold. One as a hedge against inflation, and two as a safe haven asset during panic or crisis. So, let's look at both of these factors and see how they stack up in today's context. So let's look at inflation for a second and think about it. Think about what are your expectations of inflation in coming few months. Well, let me share my expectations. Well, my expectation is that US tariffs would continue to push inflation higher, and most analysts believe that inflation would rise in coming quarters. But they also believe that this would be a one time bump and not the start of a runaway inflation. So, yes, higher inflation can push gold prices up, but if inflation doesn't spiral out of control, the upward push may be limited. What about the fear factor? Not long ago, markets were nervous about US government deficits and the credibility of treasury bonds. The bond market was quite anxious, and also there were big voices like Jamie Dimon warned that the bond market could crack. At the same time, central banks around the world were buying gold as part of a de-dollarization trend, uh, reducing their US dollar holdings and replacing them with gold. Both of these factors gave gold quite a bit of boost. But have the concerns disappeared? Well, not really. The fundamentals haven't changed much, but the sentiment seems to have shifted a bit. Here is why. The bonds are now trading at a more attractive levels and investors see value there, which reduces the panic selling. Also, the so-called bond vigilantes, the investors who would punish the government by selling bonds when fiscal policy looks irresponsible, they seem to have laid low for a while. So, the fear in the bond market seems to have cooled down a bit, at least temporarily. Now, what does this mean for gold? Well, on one side, inflation points to higher gold prices, and on the other side, reduced panic suggests less buying pressure. So, we are getting mixed signals here. But there is one more piece to the puzzle, that is, interest rates and the pace of economic growth. Well, you might know that Federal Reserve has recently cut interest rates, and there is expectation of further interest rate cuts in the current year because there are concerns about a slowdown in the US economy. Generally speaking, interest rate cuts are bullish for equities. And so, in a scenario where stocks are trading at all time highs and bond market looks stable, at least temporarily, if the economic growth numbers also start showing positive trend, then in such a scenario, investors usually won't rush into gold. But if the pace of economic growth slows and inflation increases, then worries might set in and those might push gold higher. So, where does that leave us? Well, fundamentally, US deficits haven't gone away, and this means that in the long term, there is still a case for higher gold prices. But in the short term, with equities rallying and panic subsiding, buying gold at all time highs looks risky to me. Personally, I bought gold back in December last year based on the same logic: tariffs, inflation pressures, and bond market uncertainty. That bet has paid off. But if I didn't already own gold, I would not jump in right now, and especially just because everybody else is talking about it. Instead, I would watch two things closely: inflation trends and shift in market sentiment, especially around bonds, deficits, and economic growth. If either of those turns negative, gold could spike again, and that's when I would consider adding more. Maybe I would factor in some technicals as well. So, to wrap it up, gold still has a medium term bullish case, But in the short run, to me, it feels overextended. If you already own gold, enjoy the gains. But if you don't, please don't buy out of FOMO. Instead, stay patient, watch inflation and sentiment, and be ready for volatility. Well, that's my take. What are you guys thinking? Are you buying gold here or waiting it out? Let me know in the comments. And if you like this video, do like, share, and subscribe. Thank you.